This is going to be section 1 of 5 of QuickBooks Online Advanced Certification Exam video that I'm going to be doing. And it's quite lengthy. And because these sections are so in-depth, I won't be able to take too much time to go into, as you'll see, I don't have my QBO open right now. I won't have time to go into QBO and show you any of these features, but I'm thinking at this point, if you're already a pro advisor and you're in advance, you should know exactly what I'm talking about, and I wouldn't have to show you anything. So let's just get into all the topics that I need to cover. The first one is advanced categorization. And if you did notice on my title page, just look out for these two things. You'll see important boxes. So those you want to make sure you have in your notes. And then the summary pages. You want to make sure you write all of those in your notes as well. I'm going to be covering quite a bit. All right, so advanced categorization. Businesses commonly categorize transactions through accounts and sub-accounts listed in chart of accounts. QBO contains many categorization options beyond just the chart of accounts and the product and services items. They also use class, location, customer, or projects. I'm going to look at all of those. We can create sub-accounts, subclasses, sublocations, and sub-customers. You can specify any of these for hierarchical categorization. This allows you to group and report showing different levels. And you can have 5 hierarchical levels, including the parent, or 4 hierarchical levels, excluding the parent. And you're going to see that I'm going to say that a few times because there's a few questions about that. So this was just pertaining to sub-accounts, but then that same rule goes to all of them, subclasses, sublocations, sub-customers. And I guess they asked this under all those circumstances. So I have repeated this throughout the slide. And you see the two importance there, so make sure you have those in your notes. And my example is the same one that I had from 2 years ago in the video I gave you with sub-accounts. So you'd have maybe a parent account, and that would be called utilities. And then you can have 4 sub-accounts, gas, electric, water, and phone. So sub-accounts on reports. When it comes to using accounts and sub-accounts, clients can do the following. On any report showing the parent account, the sub-account data can be shown under the parent account. However, sub-accounts are indented. If you choose not to display the sub-account, you can roll up all sub-accounts into the parent by selecting the downward arrow next to the parent account's name. To expand individual groups of the accounts, select the sideways arrow next to the group name. To see less detail, select the downward arrow and collapse the entire group. Advanced methods of categorization. The advanced methods of categorization of QBO is tracking transactions by class, location, job, or a combination of these methods. As of June 2022, and we're almost actually just a couple of days away from July, so I'd almost say July 2022, class and location tracking are not available in Simple Start or Essentials. However, Plus and Advanced allows for tracking classes and locations, although Plus has its limitations. So it has a limit of the number of classes and locations you can add, and there's also a limit of the numbers of tags and tag groups that you can add depending on your client's subscription level. So here's one of my summary pages. Here's a sub-account summary. Sub-account balances appear indented under the parent account on reports. Sub-accounts provide more detail on accounts and reports in a simple and straightforward way. And you can collapse or expand each group of accounts on reports depending on the arrow direction next to the group. Sources and targets. And if you notice this time what I decided to do, if you go to your training section and you go right under the 8 module section for the Pro Advisor, there's the 9 module section for the Advanced. I went ahead and just did it in the same exact sequence as they have it in the training section. So you can follow along with your notes in my video as well as you follow along with your training section. So there, you'll see some things I cover and some things I don't. you should have additional notes in there for the things I don't cover. And remember, as we go by, as the years go by, more features are changing or they're adding things. So add to the sections if I'm lacking anything. All right, so the next one is sources and targets. And those are terms in which QBO uses to describe transactions. They are map transaction data to an account, sub-account, or another advanced categorization option. Each method of advanced categorization affects sources and targets differently. The source of a transaction is the summary of what exactly is affected by the transaction. So for example, when writing a check, the source of a check includes the amount of the check, the payee, and the bank account from which the check was written. For example, class tracking affects only targets, not the source account of the transaction. So here's sources. There's only one source per transaction, and it is visible in the top header section of the particular transaction. Source accounts are always balance sheet accounts, such as a bank account, undeposited funds, accounts receivable, accounts payable, or credit card type accounts. The source of a transaction also has summary information about it, like transaction date, reference number, memo, location, total amount of the entire transaction, transaction type, name, account, like I just said, cash, AR, AP, or credit card, and then job. Targets. The targets of a transaction provide information on how the transaction is distributed in the general ledger. So targets include memos, accounts like inventory, amounts, location, class, and job. A transaction can only have one source, but can have many target lines. So for transactions that involve product services, the setup of the product service determines the target account. On the next two slides, let's identify the source and targets of the invoice. So here's the invoice, and you see it's invoice 1037. I got this from the training module. And I put here on the top, I'm identifying that this is my source information. This is letting me know this is an accounts receivable transaction because it's an invoice. I'm sending a bill out to my customer and I'm going to get paid later. So this source information or this particular transaction, the source information is accounts receivable. Now let's look at the target information. So the target information are those three lines there. These are the products that are being purchased by my client and the amount that they ordered and the total. So all this information here is my target information. So here's my source and target summary. Source account data must be a balance sheet account, and transactions have one line of source data. All right, and let's see. So now we're going to look at transactions. Somebody had actually sent me a message about this to explain this a little further, so hopefully they're seeing this video. So let's look at transaction journal summary. So the transaction journal, when you're looking at any transaction that you're doing, you can scroll down to the bottom and you'll see a bar with certain words here for you to choose from. All the way to the right, if you select more, you will see that a list of things will come up and one of them will say transaction journal. So when you click on that, you would see the transaction report come up. So the transaction journal report will come up and it'll show you the exact details of the journal entry for whatever transaction you're looking at. So I have here to get more detail about a transaction, select more, and this will open up the transaction journal report. And it'll show you exactly what the journal entry is for that transaction you're looking at. So here's a transaction journal summary. The most specific way to see the debit and credit journal entries for a transaction is by opening up the transaction journal. Go to or open the transaction, click More, which we just saw is on the bottom, and then select Transaction Journal. Class tracking. With class tracking, clients can easily categorize income and expense transactions from different business sectors, giving them instant insight into their company's financial standings. Class represents business sectors like store departments or product lines. You can use them to get deeper insight into your sales, expenses, or profitability for each of these sectors of your business. Once you turn on the feature, you can assign classes to transactions. Class tracking is available in Plus and Advanced subscription levels. With class tracking enabled, you can run a profit and loss by class report. Items that are in the not specified column might reflect unclassified transactions that are causing inaccuracies in the report and therefore need to be classified. So you would double click on those and classify those. Clients can also assign classes to products and services, making it easier to fill out forms. If you don't need to enter a class for each product you sell to a customer, you can save time and assign one class to the entire invoice or sales receipt. Instead, assigning classes are defaults but can easily be changed when needed. Also note that classes only affect the targets of the transaction, not sources. Let me say that again. Classes only affect targets of transaction, not sources. With class transactions enabled, with class tracking enabled, you can create subclasses and assign them to parent classes. You can then drill down to see which activities in each class are profitable and which aren't. So looking at subclasses, just as we will see with sub-accounts, for each class, you can add up to 4 levels or tiers of subclass. In other words, each class is limited to 5 hierarchical levels, including the top level parent class. However, there is no limit to the number of classes and subclasses you can create at each level. Keep in mind, though, that in QBO Plus, you have a limit of 40 combined classes and locations. And then that does include subclasses. So class tracking, adding classes and subclasses. So you would select the gear icon and then you would select all lists and then classes. Note that this option is only visible after class tracking has been turned on. So you have to first turn on the feature of class tracking and then you would be able to see classes there in the all lists section. In the Classes menu, you would select New. In the pop-up window, enter the desired name of the class, and then you would save. To create a subclass, you create a class the same way as above, so you would go to Gear Icon, All Lists, and then Class, and then New. But this time, you would check the box Is Subclass. And then from the drop-down, you would select the existing parent class or whatever parent class you want to select for that particular subclass, and then you would click Save. Assign class tracking. So this is how you would assign it. You would go to Gear Icon, and you'd go to Account and Settings. You'd go to the Advanced tab, and then you'd go to the Category section, and you would go to the pencil icon to edit, and then you would check Track Classes. Then you also want to check Warn Me when a transaction isn't assigned a class. This is optional, but it's good to turn on so when you look at reports, you know everything has been properly classified. Under Assigned Classes, select either 1 to entire transaction or 1 to each row in transaction. I see I have an asterisk there and I put important, so make sure you have that in your notes. So under Assigned Classes, you'll have 2 selections there. You have to select either 1 to entire transaction or 1 to each row in transaction. And then you would click Save and Done. So here's my class tracking summary. You can assign multiple classes to a transaction. The not specified column in your profit and loss by class report can represent transactions that have not had a class specified. So therefore, you would probably want to double click on that and classify them properly. And assigned classes are defaults, but can be easily changed when needed. Location tracking. So clients with operations at several locations can track performance and profitability by location. This could be done by department, building, city, or even state. You can use this data to monitor each location's performance and compare figures for multiple locations. To perform even more comprehensive tracking and reporting data, the company can combine location tracking with class tracking and compare the profitability of specific activities at each location. So here are location tracking guidelines. The guidelines to keep in mind when setting up location in QBO is any company can have only 5 hierarchical levels, like I said, I'm going to be mentioning it a few times, of sublocations. That's including the top level. So remember, you know what that means. Sublocations count toward QBO Plus's usage limits. A location can only have one parent. You cannot assign a sublocation to multiple parent locations. If you wanted several locations to have specific sublocations, you would have to then create a sublocation under each one of those parent locations. With class tracking, you can assign a class to each line. However, with location tracking, you can only have one location per transaction. This is because location affects both sources and targets. This means that if you run a balance sheet by location and use the normal workflow, it will balance. When you enter journal entries where there's no source, you need to make sure the location has a debit and a credit with the same dollar amount. Setting up location tracking. You go to the gear icon and then Accountant Settings, and then you go down to the Advanced tab, and you'd go to the Category section, and you would use the slider to turn on Track Locations. Then you would now be able to use the location label drop down to choose the type of location to use for location tracking category in QBO. Labels include businesses, departments, divisions, locations, property, store, and territory. Then you would click Save and Done. Now we can add some locations. So select the gear icon and then go to All Lists, and then you would see locations and you would select New. A pop-up screen appears giving you the option to specify unique settings on the sales forms for that location. You can specify the form title, company name, address, email, and phone number. Now set the location and then select Save. So if you see I have here important in the location fields, this is where you are able to specify the form title, company name, address, email, and phone number. All right, back on the main screen, you can see the first location is set up, so you can now add a sublocation to it. So again, you go to Select New, and then you would check this is a sublocation checkbox. If the sublocation telephone number and address is different from the parent, you can edit these fields so that they appear correctly on sales forms. Select this location has a different address where customers contact me or send payments, and add a new address. Then do the same for the phone number for the bottom option. Note that if you specify these settings for a location, it will override what's in the company settings. Then you would click Save. Location tracking features. Ooh, I see I made a mistake here. To filter and view reports like bank deposit page, where you can see all payments received for one location and deposit them as a group to the location's bank account. Thus, you'd maintain records for different properties with separate bank accounts. Okay, so what we're saying here is you can view a report like the bank deposit page, and then you'd be able to see all these payments made for several different locations, and those locations can have different bank accounts. All right, and I see an important there, so you want to make sure you have that in your notes, that is a feature here with location tracking, that a person or the owner of the company can have several different properties with different bank accounts. Locations can be filtered on the Pay Bill screen. Journal entries are the only transactions that allow you to add multiple locations. They don't have a source, but every line on a journal entry is a target. But Because of this, it's important to remember that all lines on a journal entry that adjust a specific location should balance in order for the balance sheet to remain in balance. So you must make sure your debit and credit are the same total amount to that particular location on that journal entry. So here's my location tracking summary. The location can be filtered on the Pay Bill screen. The location can be selected on each row of a journal entry, and location labels, for example, division or territory, can be changed to suit the individual business. And I apologize for some of those grammar or spelling errors in that section. Classes versus location tracking. So here's a little table. It should have borders, but I guess I left that out. Showing you the difference between classes and location. So here's a question you might want to ask one of your clients. Do you need to run a balance sheet by category? If they say yes, then you want to suggest they would use location tracking. Here's another question. Do you need to put more than one category on a transaction? Or do you need to recharge expenses for costs incurred to maintain properties? If so, you would encourage them to use class tracking. And I see here important, so there must be a question pertaining to one of these. So if you see a question asking, let's say, does this client need to recharge expenses for costs incurred to maintain the property? Then you would say, I would suggest they would use class tracking. And here's the last one. Do they need a reminder to enter categorization? So if they need a reminder to enter categorization, then you would suggest class tracking. Okay, job costing and sub-customers. Job costing refers to measuring the profitability of a job by tracking direct expenses against the revenue produced. This allows your client to see how much money they spent on each job compared to how much they've made. If the client has billable time switched on, they also will be able to track billable time by job. To track the financial performance of individual jobs, clients can create sub-customers for their customer and assign invoices and expenses to them. Sub-customers can represent many things, such as multiple locations of a project, subgroups within a larger organization, or a growing list of projects delivered to a customer. How many customers and sub-customers can you add? For each customer, you can add up to 4 levels or tiers of sub-customers. So each customer is limited to 5 tiers or hierarchical levels, including the parent customer. However, you can add unlimited customers and sub-customers at each level. Clients can assign multiple sub-customers to a customer, but they cannot link a sub-customer to more than one customer, meaning parent customer. If you or a client wanted several customers to have specific sub-customers, you would then have to create sub-customers under each one of those parent customers. So here's setting up a sub-customer. You would go to your gear icon, Accountant Settings, and Advanced tab, and then in the Other Preferences section, you would enable your editing, and you would select the required label that says Customer Label. And then you'd see the drop down there, customer label. You would save it, and then you'd be done. Now let's create a new customer. From the left-hand navigation, you would go to Sales, and then you select Customer tab, and then you'd select New Customer. And then, your little pop-up window comes in, and in the Company Field pop-up window, adding the name of a sub-customer is now available. And we'd be adding, let's say, they have here, let's say if you would add the address 125 Main Street, because that's job is not for like the existing customer, but it's a different property. So therefore, you would also make sure you select is a sub-customer box. And from the Enter Parent Customer dropdown, you would select whichever customer you want to link that to as your parent customer. And then from the next dropdown, from the next dropdown, you would select either Bill with Parent or Bill with Customer. And you'll see later on why that is important. Note, with Bill with Customer option, the client would need to select sub-customer name on the receipt payment screen in order to see the invoice. The client would not see the sub-customer's invoice if they had selected the parent customer. In the customer screen, customer balance due include the balances of the sub-customer, regardless of which option is selected. And then finally, you would click Save. It'll make more sense later on, too, when we mention the difference between bill with parent and bill with just customer, sub-customer. All right, assigning expenses against jobs. So you'd go to the gear icon, Accountant Settings, you'd go down to your Expense tab, and you'd select anywhere in the Bill and Expenses section, allow editing, and then you'd make sure that the Show Items table on Expense and Purchase form is selected. Make sure that the Track Expenses and Items by Customer option is also selected. This adds a customer column to the purchase transactions. If your client would like to add purchases incurred on invoices, then you would turn on Make Expenses and Items Billable. And then you would select Save and Done. With these settings in place, you can now assign the following purchase transactions against jobs. You can go to checks, bills, expenses, vendor credits, purchase orders, and credit cards. Credit card credits, I'm sorry. Next slide will display those steps. So if we were to go to the plus sign new and go to check, now we'll notice that you have after you've completed the steps from the previous slide, you'll notice that in the customer column, you wouldn't have seen that before. So now you're going to select what specific job you want this to go to. And then your normal procedure would be to select an appropriate payee, bank account, payment date, category or item, description, and amount. And then you would select the customer drop-down to assign the expense for the job to the customer or the sub-customer. And then you would select Save and Close. Job costing and sub-costing customer summary. I focused on setting up and assigning expenses to jobs, but in the training section, they go over running reports by jobs. Please review this section. I didn't see any questions that were submitted to me covering any of those, but I think that is really important for you to go over if you're going to be taking on clients that want to use job costing and some sub-customers. So you want to make sure you look at the section on reports. Transactions in the not specified column of the profit and loss by customer report will represent transactions to which no customer or job was assigned. To avoid this, a client should set up an overhead customer to which you can assign transactions that don't specifically pertain to a job. So what they're saying there is if you run this report and it shows that you don't have something assigned and it's not actually going to be assigned to a job costing or sub-customer, then you would create this overhead customer that would be able to take over those jobs that aren't going to be classified. And then this way, nothing would pop up in the not specified column. The other thing I think you should take note of here is 2 customizations need to be made to see the profitability of products and services for a specific job or jobs. And that would be display column by product service and filter for one or more specific customers or sub-customers. So again, display column by product and service. And then the other one is filter for one or more specific customers or sub-customers. Next thing is projects. Project features only available in Plus and Advanced. This feature offers similar features to job tracking using customer and sub-customer relations, just as such as keeping track of multiple jobs per customer, accessing active projects and adding transactions to them, and running reports on profitability of each job by categorizing each transaction to individual jobs. Unlike sub-customers, projects allow your clients to track billable and non-billable hours alongside other project expenses, manage multiple projects at once, and quickly run and follow reports such as project profitability, time cost by employee or vendor, and unbilled time and expenses. Projects can be added to transactions when processing bank feeds. So a sub-customer converted to a project. When your client converts a sub-customer to a project, only the sub-customer display name carries over. The following information isn't transferred: addresses, contacts, phone numbers, tax codes, terms, payment billing information, and attachments. So here's important. In addition, addresses, tax codes, and terms will revert to the parent customer settings. Also, to be available to convert, a sub-customer must be set up to bill with parent. So if the sub-customer is set up for bill with customer, then you wouldn't be able to convert it to a project. That was that. Remember I said earlier why it's important to know which one you're setting it up with. You can always change it and then change it to a project, by the way. Okay, project summary. Projects versus sub-customers. So what's the difference? Viewing a dashboard showing the profit margin of multiple projects at once. That's one of the features with projects. Another one is generating pre-filled project-specific reports. And I identified those 3 reports in the previous slide. And then seeing the time cost by employee or vendor report within the Project Center dashboard. 2 other features are projects can be added to transaction when processing bank feeds, and clients get one-click access to already filtered project profitability reports. Billable expenses. When gaining revenue, clients often incur expenses such as buying materials for renovation work, paying fees for permits, or spending money to travel to different job sites. Clients need to keep accurate records of these expenses so that they can later bill their customers if this was agreed upon in the terms of the job contract. For example, I include mileage reimbursement when traveling outside of a 15-mile radius of my home office. And that's something I discuss right away with my clients. And if they agree to that, then we set up an interview and see if we go from there. There's 3 types of billable expenses. There's billable expenses, billable time, and delayed charges. We're going to go over all 3 of those. All 3 types of billable charges are non-posting transactions. Clients can use them to track activities that they plan to bill to a customer in the future, but haven't yet included on an actual invoice. Turning on billable expenses. You'd go to the gear icon in Accountant Settings. You'd select the Expenses tab, and you would select anywhere in the Bill and Expenses section so we can enable editing. You'd want to make sure that the Track Expenses and Items by Customer is turned on. This adds the customer column to the purchase transaction your client needs in order to assign the expense to the customer account. To add a billable checkbox to purchase transactions, make sure that the Make Expenses and Item Billable is turned on. Next, uncheck the box Track Billable Expenses and Items as Income, and then select Save and Done. So billable expenses part 1. So to set it up, you'd go to, or as an example, you go to +sign new, and then go to expense, and enter the details in the, as you always do, payee, payment account, payment date, category, description, and amount. And then you would check in the billable column. So you'll see there now, you'll see a billable part, and then they'll have a little box there, and you'd click in that box, and you'd see a check mark. Then you would choose the customer. Right to the right of there, there'd be a drop down, and you would choose which customer is to be billed. This is where you specify the customer, sub-customer, or project to bill the expenses against. Note, QuickBooks will not allow billable expenses to post to an income account. It only allows them to post to the following account types: expense, other current liabilities, other current assets, other assets, fixed assets, cost of goods sold. But just note, you can link each of these above stated accounts to an income account, which I'll show you how to do that in a minute. All right, billable expenses part 2. Next, open the item details section by selecting the arrow. and in the product service column, choose the item. Next, enter the quantity of the item, and then you would click the billable checkbox again. So like I said, there's that column billable, and there'll be a little box in there, and you click it and you'll see a check mark come in there. And then right to the right, it'll say in the customer box, you would select which customer to go to, and then again, you would go save and close. So now QuickBooks Online has now created 2 billable expense charges, non-posting transaction, but 1 expense, which is a posting transaction. A posting transaction will create an accounts payable if it's a bill, or a payment account if it's a check or expense transaction. It will debit one of the following: the general ledger account specified on the category detail line, or the cost account mapped to the product or service on the item detailed line. Invoicing for billable expenses. So to invoice for billable expenses, you go to +sign new, you go to invoice, and on the invoice, you'd enter the name of the customer, and then you enter the invoice date. Now note, as soon as you enter the customer name and add the invoice, as soon as you enter the customer name, the add to invoice drawer opens up, showing the billable expenses we created earlier. So you would either select, you would do them individually, or you would select add all, and then you would select save. Now select more at the bottom and go to transaction journal, and then you'd be able to see the breakdown of the billable expenses there. Billable expenses with customers. If a client creates an invoice for a customer that has sub-customers configured with bill with parent, when the sub-customer was created in the very beginning in QBO, and you put bill with parent, the drawer on the invoices for the parent will show any charges for these sub-customers. This allows clients to easily add these charges to the invoice. However, if a client created an invoice for a customer and the sub-customer was configured with the bill this customer, the drawer on an invoice for the parent will not show any charges for those sub-customers. So if the client creates an invoice directly for a sub-customer, the drawer will only show charges associated with the sub-customer, not the parent customer. In the training center section under billable expenses, they also cover adding a markup and invoicing when markup is turned on. However, I feel like I can kind of still address that in the next 2. And there's a lot that they cover under billable expenses. So that's why I didn't just go right into it, but I do an example with you at the end on adding a markup. Okay, so when recording billable expenses to an income account, you would go to your gear icon and then account and settings, and then you would come down here to expenses, and in the bill and expenses area, you would see this section. And then here you can see make expenses and items billable. Here are the options. You can do a markup with the default rate. So it's a rate that you would choose. And this particular person put 20%. So that means that you have certain expenses that have incurred with the job, but then you could also put an immediate markup that you will also bill to them. And obviously you'd have to justify this markup. And then you could also select track billable expenses and items as income. Now remember earlier when we were using our example, we said uncheck it. But just know that if you're using one or more income accounts to track billable expenses, you might want to make sure you have this set up. Okay. So step 1 is setting it up in your accounts and settings. So step 1 is making sure you have your billable expenses set up. And then if you notice here too, when you're tracking billable expenses, you can either select in a single account or in multiple accounts. And then you would click save. Now let's look at the second page. Now the second page is step 2. So step 2 is setting up the expense in chart of accounts, linking it to the proper income account. So remember I said earlier, you can't link it to an income account. What you can do is link the individual accounts, and I listed all the accounts that you can use under billable expenses. All those individual accounts can be linked to an income account. So here's an example where we're taking a specific expense account and it's advertising, okay? And we're linking it. So I'm going to click here, use for billable expenses. So when I click to use for billable expenses, it will allow me to link it to a specific income account. So this is the way to get around it and still be able to tie it to an income account. So that would be here, this step 2, setting up whatever the account is, this example is expense, in your chart of accounts and linking it to the proper income account. So here are my summary points for billable expenses. If a client notices that some billable expenses are not in the invoice, what may have happened? One of the location or sub-customers is configured to bill this customer. Because remember, it should be set to bill with parent. So if a client calls you and says, hey, I'm not seeing any of these billable expenses on the invoices, that means that you have to go back and make sure that that sub-customer is configured to bill with parent. Okay, here's the second one. A client says she does not have the ability to mark an expense as billable on an invoice. Why might this happen? Well, that might happen if you didn't select make expenses and items billable. So remember earlier I showed you you have to make it enable it. So make expenses and items billable has not been enabled, and that you would see in step 1 slide, 2 slides before the one we're looking at right now. There's an actual, section where you could see the feature where you have to enable that. Make expenses and items billable. You need to enable that by sliding it to the right, and then you have those options on the bottom. Here's the third one. A client just called because there were no billable expenses available when they tried to create an invoice. What 2 factors likely are responsible? The setting to make expenses billable is not turned on, and the billable column on the purchases was not checked. So I've seen that too. Sometimes, remember I said you'll see now when you open up, X, whatever the transaction is, you'll see the column billable. And if you don't check that, then they won't know, and then you won't tie it to a customer or sub-customer. So that's shown as step 2 process and covered in the billable expenses part 1 and invoices with billable expenses slide. So that's the 2-step process there. If you look at that, you'll see what I'm talking about as far as these 2 as being reasons. And the last one is, what are 2 features of billable expenses? The purchase transaction related to billable expenses can be used with other asset account. And remember, I listed several of them there. This is just one of them. So the purchase transaction can be used with other asset account. And another one is a default markup percentage can be added automatically on an invoice. So the default markup percentage can be added automatically. Billable time. I'm sure many of you have heard this expression. Time is money. And as a bookkeeper, it really is. One of the things I do in my packages is add the option to be able to call me later and ask questions. I put that in my package. If you don't add that in, then I actually charge you for future phone calls. So clients who serve multiple customers often need to be able to track time spent by each employee on each job. They also need to invoice their customers for that time and run reports on billable time to measure the profitability of each activity. QBO Essentials, Plus, and Advanced all include a time tracking feature, and each subscription level allows clients to add unlimited time tracking users. With the time tracking feature activated, these users can enter and edit time spent by their employees on each job. This data can be used to invoice customers and run reports to view billable time. Note, this feature is not currently available on self-employed or Simple Start users. So setting up billable time, part 1. You go to your gear icon, Accountant Settings, go down to Advanced tab, and scroll down until you find the time tracking. And I have that here, time tracking, and you'll see 2 features. Add service field to timesheets and make single time activity billable to customer. So add service field to timesheets allows the client or a time tracking user to specify which service or task was being performed by the person tracking their time. This is important for reporting purposes. Activating this option adds a drop-down field to each timesheet. The drop-down is automatically populated with the company's list of non-inventory and service items. The other one is make single time activity billable to customer, and that allows the client or the time tracking user to specify whether their timesheet activities should be billed to the customer. If this option is turned on, a checkbox will be added to the timesheet as follows. So when a time tracking user enters the time as a single activity, a single check mark box to make the time billable will show up there. When a time tracking user enters time as a weekly timesheet, a checkbox is included for each line, for each day. In addition, with the option switched on, QuickBooks also offers two additional options. Show billing rate to users entering time, which allows your clients to show or hide the hourly rate associated with the selected service item on the timesheet. And a drop-down allows the client to specify the first day of the work week when using a weekly timesheet. They would typically align this with the first day of their pay period, and that is the first day of their working week. So here's the scheme. So if I selected make single time activity billable to customer, and then I select show billable rates to user entering time, then they'll say first day of work week, and here I would select, and they would have all days of the week, and then I guess for this particular company, it's Monday, and then you would click save. So billable time method 1, basic time tracking. So from the plus sign new button, you would there see time tracking entry. So you have a time entry. This is if you're doing basic time tracking. You would see under employee only, you would see time entry. Or you can access time from the left-hand navigation pane. So over here on this, you go down and you would see time, and you'd click on it. And that's pretty self-explanatory. I'm not going to go over it. You can go to the training area if you want to see more on this, but it's very self-explanatory. The second method is the weekly timesheet or the single time activity. So if you did what I showed you 2 slides ago, if you selected, okay, I want to turn these 2 on, and I picked Monday, all right, so we're going to look at that. You'd go to plus sign new, and then under employees, you would see the 2 options, single time activity and weekly timesheet. So under this method too, you would go to plus sign new, and then under invoice, you would select your customer from the drop down, and this opens the add to invoice drawer, which shows any open billable time that is associated with that customer. Then you can be added to the invoice, and you would select what time is billable to this customer. Also, any other billable charges would come up. The income from the invoice is recorded based on the sales account configured on the service items. If the service item wasn't specified at the time of entry, QBO users by default will have the hours item there. Note that you can change the posting income account on the item itself. Changing the service item overwrites the description, quantity, rate, and tax, but the transaction stays linked to the time tracking entry. When you're ready, you go save and close. So here are some reports that show billable time. There's unbilled time, and this shows the product and services time activities that haven't been invoiced yet. Then you have recent edited time activities. This shows time activities client employees recently entered or edited. Then you have time activities by employee detail, and that's when you're looking at one specific employee, what their hourly rate and duration were within a time period. And then you have time activities by customer detail, and that's showing what your clients which your employees were, with one specific client or customer. Okay. So here's my billable time summary. If your client chooses method 2 and selected Add Service field to timesheets, what 2 product service type items are automatically populated to select in the drop-down of the time tracking entry? Those 2 would be service items and non-inventory items. And if you didn't see that, that was in the Setting Up Billable Time Part 1 slide. So you can go back to that. And here's the other one. Your client is exploring reports displaying billable time. She is asked to view all the time entered this year for one specific employee. What report would you suggest she run? Well, it would be time activity by employee details. And that was the last slide we looked at. Okay, delayed charges. So certain businesses provide regular services or products to clients on account. And these services or products can be performed or delivered on a daily or weekly basis at a client's discretion. Examples would be, let's say, a bakery providing a local hotel breakfast and or lunch buffets based on events planned on a weekly basis by that hotel. Or let's say a snow plowing business who clears all snow from a local shopping mall in Alaska during the year. I wrote LOL because my students that are watching this know I always use these 2 businesses as examples. I don't know why. When I teach accounting, I always like using bakeries as examples and a snow plowing company. Many customers in these situations prefer to pay monthly and thus receive one monthly bill or invoice. So going back to that bakery. So if I owe, and for my accounting students, I say G-Tree Bakery. I set up breakfast buffets every day, Monday through Sunday, for a local hotel. But then they also call me for certain events, meetings, weddings, and so on, that they might have a lunch or dinner buffet, and I set that up. Obviously, I go, I do it, and I leave. I'm not billing them as I go. So instead, I might set up a monthly invoice that I would send them. And that means that I would have to make sure I keep accurate records of each transaction of each specific day of the product or service that was provided so that I can have an accurate invoice for that customer at the end of the month. They can even set up reoccurring transactions if needed. Like billable expenses, billable time, and delayed charges are all non-posting transactions. Delayed charges are available in all subscription levels except Simple Start. So delayed charges part 1. So you'd go to +sign new, and then you would select delayed charge. You'd select the customer, and then you would add the product or service, and then you would select the quantity and rate. Notice the make recurring option at the bottom of the screen. Selecting this allows you to create a template for setting up a recurring delayed charge and schedule it as needed. When you're done entering the service and rate, you would select Save and Close. If a client has set up a recurring delayed charge but is unable to carry out the service, they can record a delayed credit rather than going back and editing the delayed charge. A delayed credit is the opposite, or contra, as we usually, as bookkeepers say, would be contra to the delayed charge. To record one, you would go to +sign new and then delayed credit and then select the customer, the product, service, quantity, rate, and then save and close. And that would just counteract whatever delayed charge you had already set up. Note, delayed charges can also be used to track billable mileage, parking fees, and simple office fees like photocopy fees and fax machine fees. So as I said earlier, I do charge for mileage, but if I have to, I had one client one time that was in Philadelphia, and I had parking fees. So that was something that I, would not, you have no idea going there on that day if you'd get a parking spot or if you had to pay. So obviously if I had to pay for parking, I saved that receipt and I billed that client for that. And in the training, they use an example where an attorney has photocopy fees or maybe fax machine fees. And if a client, requires those, then that'd be something that would come up and then you would send them a bill on that. Here's delayed charges part 2. Finally, let's see how to invoice the customers after you've incurred those fees. So you go to plus sign new, invoice, select the customer. And as with other billable charges, once the customer is selected, the add to invoice drawer opens up and it is going to show you what can be tied to that customer, and you would find that delayed charge and you would either individually add it or add all, and then close the drawer and save and close. You will learn with QBO there are certain ways to do things that make things easier in the long run, and this is one of them. One of them was also what we just mentioned a second ago in offsetting using the delayed credit. Delayed charges, unbilled charges. So good bookkeeping practice with clients such as these, have these type of businesses, is to sit down and double check for any unbilled charges, either as part of your day-to-day bookkeeping tasks or when your client is ready to send off their invoices. There are a few ways to do this, and keep in mind these unbilled charges may be billable expenses, time charges, the billable, the billable time, or the delayed charges. So it could be any one of these three. So one way to do it is to go through the sales center and then go to all sales. And then on the customer tab, you would select unbilled activity segment, and then that would be found on the money bar. And this is going to show you all customers with unbilled charges waiting to be invoiced. So that's one way. One way is through the sales center, all sales, and then selecting unbilled activity through the money bar. The other way is to review the unbilled charges report from the report center. This report shows all billable expenses, billable time, and delayed charges and delayed credits. You can also select the unbilled time report to show the time that hasn't been invoiced yet. So here are the delayed charges summary. What advantage does the unbilled charges report have that the unbilled time report doesn't? Well, the advantage is it includes billable expenses and delayed charges in addition to the unbilled time. What are some features of delayed charges? You have delayed charges can be used to track billable mileage, and delayed charges can be made recurring. And list the 3 types of billable charges. I was just stuttering on this. I'm not going to stutter this time. So the 3 types of billable charges are billable expenses, billable time, and delayed charges. I think I actually made a mistake on that, so sorry about that. It's billable expenses, billable time, and delayed charges. All right, so here's my delayed charges summary. Here's where we do the markup. So here's an example of calculating a 10% markup with delayed charges. So we have this table here set up. Let me see if I can make this a little bigger for you. So you see I say it's a 10% markup. So let me make this a little bigger so you can see it a little better. And you know I'm a Giants fan. My students do at least. So here I have Jack's plowing rental, and they charged us $400. And then removal charges are $850. Eli Manning, one of my favorite employees, worked at $20 for 10 hours. And then my other favorite employee, Saquon Barkley, had a $450 delay charge, and then he also worked for 4 hours at $50 an hour. And then we had a charge for salt pellets at $1,000. So let's look at how I would calculate the total amount that I'm going to charge my customer with the applied markup. So remember we just said it was 10%. So let me bring this down now so we can see where we got this number that I'm about to use. So with the 10% markup, I would say that I'm actually charging them 110% of the expenses, or if I use that as a decimal, it'd be 1.1. So I want you to understand where I use this 1.1. So now I'm going to add all the charges together. Remember, you have to multiply when necessary. For the hours times the pay, you would have to multiply. So I would add the 400 for the rental fee, the $8.50 here for the removal charge. The $200 is the $10, 10 hours, I'm sorry, times $20 an hour. So 10 times 20 is 200. Then I have a delay charge of $4.50 for this particular employee. So I'm going to add $4.50. And then I'm going to multiply the 4 hours times 50. Oh, say, come on, $15 an hour. $50 an hour. Wow. All right, so 4 times 50 is 200. So that's where I get this 200. And then I have $1,000 for my salt pallets. So I'm going to add all this together and I get $3,100. So if you get a question like this, you're going to add whatever the expenses are, and this is for delay charges, but it could be for any of them. It could be for billable time or billable expenses. You would then add this up to get your number, and then you would multiply it by the percentage, and it was 110% because it was a 10% markup. So I'd actually multiply this number by 1.1, and I would then charge my customer $3,410 by me applying the 10% markup. So really the expenses came out to $3,100, but I am charging them $3,410 because of the 10% markup. And I think this is our last topic, progressive invoicing. Some businesses have multi-step processes they must complete in finishing a final product or outcome. These clients usually use their estimates to generate and send invoices to their customers. However, they may want to invoice their customers at certain steps and levels of the entire process or at regular intervals. In circumstances like these, the clients need to keep track of how much they have of total estimates and how much they've invoiced you so far. With progressive invoicing, your client can create multiple invoices from the original estimate. It allows them to get paid at various stages of the project and to keep their books updated with the project status. It also helps your client with cash flow so they can pay their bills in a timely fashion. Note, progressive invoicing, I'm sorry, wrote that wrong, and I think I did that in a couple of slides. Progressive invoicing can be used as a standalone feature in all versions of QuickBooks, or you can do it along with your project feature found in Plus and Advanced. And by the way, I didn't give you an example here, but a great example would be a construction company because there's several steps of the way. And first would be pulling the permit, doing a land surveying, getting started on the foundation and so on. So each step of the way, you're going to want to get paid. You don't want to get paid at the very end. So that would be a good example here. Setting up progressive invoicing. So you'd go to the gear icon, you go to Accounts and Setting, you go to the Sales tab on the left-hand side, you select the Progressive Invoicing section, and you use the slider to turn on Create Multiple Partial Invoices from a Single Estimate. And then you would save and done. So you can have multiple invoices from a single estimate. Now, let's pull up the estimate that was created for the customer. The estimate lists the product and service items that are part of the job. Once the customer accepts the estimate, the client can change its status to accepted and then save to update the estimate. The next step would be to create the invoice from that estimate. So progressive invoicing, estimate turned into an invoice. So you'd open up the estimate and then select Create Invoice, which would be in the upper right-hand side of the estimate. And you can now choose whether to invoice for, one, a total of all estimate lines, meaning you're going to invoice them for everything, 100%. They're paying everything up front, which is unlikely. Or two, a percentage of each line, where all of the lines are invoiced at a specified percentage of the estimate, which is most likely. So maybe they say we'll pay a third up, so you might use 33%, or, a quarter, maybe, so 25%. And then you'd be sending out 4 invoices at, increasing at a 25% interval. Or the last one is a custom dollar amount of each line, where all lines appear at 0%, but are editable separately. So you would edit that at the dollar amount. The most commonly used is the second one. Input whatever was agreed upon between you and the customer, and then you would select Create Invoice. QBO then displays the total for each line at the billing point, and then you would click Save, and then you're ready to send that invoice off to your client. Progressive invoicing, doing the invoice first, and then adding multiple estimates. So in the first one, we saw we can have an estimate and do multiple invoices. Here we're going to have an invoice where we're going to add multiple estimates to it. So you can begin by creating an invoice first. So you'd go to +9 New and you'd go to Invoice, select your customer, and then a window will appear on the right-hand side of the screen with any estimates that you already have for your customer. If this window doesn't appear automatically, then select the small arrow next to Balance Due. Then select Add and add any desired estimates that you want to select from. And then again, those same options. You can either do a total, like the 100% of each line, which is unlikely, or a percentage of each line, which is more likely. Or the last one is the custom dollar amount for each line. Once you've filled out the line appropriately, then you would select Copy to Invoice, and it will be calculated, and it'd be ready to be sent off to your client. So other features of progressive invoicing. Progressive invoicing offers the ability to increase the invoice amount in one or more lines of that invoice based on an estimate. To do this, you would select the Due column on the line or lines of the invoice you want to change. And the Due column shows the percentage or amount related to the line item. And then you'd enter the desired amount to be invoiced. The next feature that I want to discuss is the increase you can put to the total amount of the estimate. There are two ways you could do this. You can add a line to the estimate or change the total amount. Or you can create a new estimate and make a new progressive invoice out of it. Third, you could delete a line on an invoice by selecting the trash can icon on the right side of the line, and then select Remove Line in the pop-up window. This removes the line from the invoice and puts it back into an estimate. Note, do not choose Unlink It, because that would remove it completely. You would not put it back into an estimate. If you want to invoice from the estimate later, you will have to add the estimate back to the drawer. And here are the last two features that they discuss of progressive invoicing. As you see, I misquoted this term quite a bit. Creating an estimate summary. So you can do an estimate summary by going to gear icon and selecting custom form styles. Choose the style that's the default desired invoice. So you should already have this. You should have an invoice that you like with your favorite logo and fonts and pictures or whatever you have, whatever your favorite invoice is. And you would select Edit to that. And then you would go to Content at the top. And then in the activity table on the right, on the bottom left, you would see Show More Activity Options, and you would check Show Progress Online Items. This is optional and will show the calculation on the customer's invoice. And on the left side, you would select the footer section, and I believe there's like 3 selections there, and you would check the bottom, I think it's the third one, and that box would be Estimate Summary. And then the last feature we discuss is reporting on progressive invoicing. The Estimates and Progressive Invoicing Summary by Customer report gives clients a complete list of all estimates and connected progressive invoices. In this report, transactions are organized by customer. So this is our last screen, Progressive Invoicing Summary. What are the steps to adding multiple estimates to an invoice? Well, first you'd have to create the invoice. So it would go +9 New, Invoice. You'd enter the customer, and then you would select multiple estimates from the drawer on the right-hand side of the screen. But that's the answer. What can be said about estimates and progressive invoicing in QuickBooks Online? Well, multiple estimates could be added to one invoice, just like multiple invoices can be created from one estimate. And here's the last one. A new client says they're unable to create a partial invoice against an estimate. What would you suggest? They need to turn that on. They need to turn that feature on in the accountant settings. And that would be from one of the slides I did from the beginning of this topic, setting up progressive invoicing. And this would end, this is over an hour, oh my God, almost an hour and 10 minutes. This ends section 1 of the advanced certification exam. Give me a week or two to get to section 2 because this is quite lengthy. But I have gotten started for those of you who have been asking me for months to do the advanced. I promise I will get all sections up. Thank you for watching.